I'm going to take a look at the two indexes today, the Nasdaq 100 and the Nasdaq Composite. I think the Nasdaq Composite is probably the more important, but right now the Nasdaq 100 has hit this psychological resistance zone at 1500. That's a prime spot for the market to take a breather, pull back maybe a little bit before it could get through that resistance. So it was unlikely to get through it on the first try. But if we go over to the Nasdaq one or the Nasdaq Composite, all right, here's the Nasdaq Composite. This is the market that broke out of this consolidation box several weeks ago, and you can see the Nasdaq Composite has not tagged 1500 just yet. Now, there is a pattern that often occurs. It doesn't happen 100% of the time. Nothing works 100% of the time, but I have noticed that when any market gets close to a big, obvious resistance zone, and especially if it's had a pretty decent run up to that resistance level, there will very often be a minor pullback prematurely before the resistance is actually hit, and that is traders that got in early in this move and have held through the move. When you're only 1-2% away from tagging the resistance, the thought process is that it's not worth holding on to catch another 1% or 1.5%, and risk that the move tops a little before the resistance is hit, and then you get caught. So very often you'll get these little pullbacks that will occur, and then most of the time, again, not 100%, but most of the time, what happens is the dip buyers will come in and they'll buy that dip as the premature profit taking. The nervous Nellies sell. They'll buy that dip, and then they'll ride the rest of the move all the way up to resistance. And so resistance, obviously, on the Nasdaq Composite is at 15,000 as well. We were about almost 200 points short right here, and it's possible that that's what's happening yesterday and today, and maybe we got another couple days of this. I don't know, but maybe the people that have been holding since this cycle bottomed here, and we got into our QQQ position right here as we were coming out of this daily cycle low. That's not to say that I would recommend selling positions right now. I think at this point you just want to hang on and accept that you're going to get caught in some volatile corrections along the way, but hang on for the rest of the bubble, just so you don't get caught on the sidelines during a big move. But like I said, I think that might be what's occurring here, is we're just got some premature profit taking, and I expect the buyers will probably come back in pretty soon, maybe even today, and then we'll continue up and hit that major resistance zone at 15,000, and then that's the point where we might get a little bit bigger correction, something that would qualify as a full daily cycle low. Right now, this based on the cycle count on the S&P, which is the cyclical driver for stocks, this would just be a half cycle low. I've noted before, most of the FANG stocks, and I expect that's where the bubble is going to be, have broken out, and the laggard was Apple, and it broke out a couple days ago. It's still holding this breakout here. As the bubble progresses, you're going to see more and more liquidity focused more narrowly into the probably these big tech names: Apple, Amazon, Microsoft, Google, Nvidia, Facebook. More and more money will be focused into there, so you're going to get a bigger and bigger divergence with the rest of the market. other sectors will start to fade, and the market will be driven higher by just a few big name stocks. So that appears to be what's happening. Where, as I noted in my last video, the advanced decline line is starting to diverge, and a lot of sectors are diverging. They're not following the regular market higher. And so I think I think we're setting up for the typical bubble type top, where money starts coming out of underperforming areas, sectors, and stocks, and just starts to concentrate in these big name stocks that drive the bubble. And this can go on for 3 to 4 months. My best guess is probably a rally into September, maybe even early October, and depending on how far the Nasdaq can go up, if we can do 50% or more in that amount of time, then I would say we're probably getting close enough to the top of the bubble that you need to be thinking about controlling greed and getting out. And I'll warn one more time that there is going to be some extreme volatility on the way up. This is not going to be just a one-way joyride to the top. There are going to be severe profit-taking events along the way. The first one will almost certainly get recovered. We may have a second one that one could be recovered as well. But if we get through 15,000 and the retail public really starts to take notice and they really start to drive that bubble phase, and I'm going to say if the Nasdaq can get to 17.5, then 20,000 is probably going to start pulling like a magnet, and at that point I'd say the odds are pretty good that the bubble's at least going to go that far, and it may go considerably above that as well. Bubbles can become completely irrational. So, but if we can get 17.5, then I think 20,000 is a pretty good bet at that point.